Welcome to Better Than We Found It, the podcast that goes inside the minds of the leaders building our future.
The difficult we do today, the impossible we do tomorrow.
I'm Josh Huggins, founder of GS2, a search firm dedicated to finding the visionaries powering the most critical shift of our time, the US energy transition.
So much of what I do is passion driven because of those experiences.
This season, we're tracing the unique journeys of the architects of America's new energy landscape, exploring how their diverse backgrounds forged the psychology, the ambition, and the brutal truths required to lead in a time of unprecedented change.
If you're going to be an entrepreneur, you got to be a risk taker, and you got to be able to take calculated risks.
My mission is to uncover the playbook of the leaders in the industry, so we can all learn what it takes to build a world that's truly better than we found it. Welcome back to Better Than We Found It, the podcast where we talk to leaders and innovators building a more sustainable world. I'm your host, Josh Huggins, and today I'm speaking with someone whose career is a masterclass in speed, scale, and execution. It's all in aid of our fourth season of Better Than We Found It, where we're shining a spotlight on those helping to shape the energy transition, particularly in the USA. And today's guest is Jon Parrella. He's the founder and CEO of Teraflow Energy. In just a year, his company has skyrocketed to become the largest flow battery business in the world, aiming to solve the colossal energy needs of data centers with American-made long-duration battery storage. But Jon's story didn't start in clean tech. He's worked across a range of different organizations, and his journey of entrepreneurship is with a common thread of spotting huge opportunities where others sometimes do or don't, but having the grit to build the solution from the ground up. And that's what we dig into in the conversation. And we explore how Jon's mindset has forged the opportunity with Teraflow and the unique situation that they find themselves in. I think you'll find his energy is infectious, he's engaging, he's inspiring. And if you want to understand what it takes to really build something of scale from nothing with purpose and sustainability at its core, you're at the right place. So let's dive right in. So Jon, welcome to Better Than We Found It.
Oh, thanks for having me. I'm looking forward to it.
Yes, very much so. At my end, I think I'm going to learn quite a few things today about some new technology. But perhaps for the audience, I've done a little bit of an intro to you, but I'm sure I haven't done it justice. So for the audience that don't know who you are, would you mind just giving a quick overview of yourself and Teraflow Energy?
Sure. My name is Jon Parrella. I'm the CEO of Teraflow Energy. Teraflow Energy is a new company that was formed in 2024 to stand up domestic-based manufacturing of flow batteries, but with a specific twist on using flow batteries for AI data centers to help with solving the volatile load issues and responsive and controllable load issues for data centers.
Excellent. Well, we're definitely going to get into that in more detail and keen to hear more about it. I was fascinated when you told me about it, but as you know, the podcast is around the journey of leadership as well as to the current day. So I want to go back to the early part of your career before Teraflow. You mentioned to me you've built and you've exited multiple companies across trading, some SaaS products, and also fabrication. Where were you always drawn to, I suppose, the complexities of the energy sector, or was there a specific moment for you that you realized that the energy sector was something that really piqued your interest or pulled you in?
Well, I was always intrigued being a serial entrepreneur with annuity-based businesses after I kind of had my first successful exit and learned what drove, valuations and the exit strategies. And it was interesting because the multiples were always higher on annuity-based businesses. So that's what kind of drove me into energy and software as a service and things like that. Making widgets was always something that everybody likes to do, but exits aren't necessarily always as good. So I really got driven more towards the model than electricity. But as I got to know how the commodity actually functioned and worked in the market, it definitely intrigued me and got involved in a lot of different aspects of it, from the deregulation side to the physical asset side that would provide the electron. So,
sure, understood. And you mentioned your first major step into energy was with Discount Power, which was a big success by all accounts. I think you mentioned to me some numbers from 0 to 75,000 customers in 14 months.
Yeah, that was
tell a bit more about
ride.
That? Pardon?
I said that was a wild ride.
Yeah.
I stumbled across the electric industry. I was more in construction than I was energy when I got out of college, and I stumbled across it because I was at a home show and there was a broker across the aisle from me for a deregulated electric supplier in Connecticut at the time. And I walked over to him and I said, "What is this?" And they explained it to me, but they said they were just brokers. And so I went home and I did some research, and I ended up calling the phone number on the website, and I got the CEO because it was only a 2-man show. And I said, "Well, can we meet?" He's, "Sure, let's go meet." So I went to their office, which was at a house, and met with the 2 guys that were running the company. And I said, "I think I can bring you a lot of customers." And he looked over on the desk and there was a pile of paper about a foot tall, and it was enrollments that he couldn't process. And I said, "Well, what's the problem?" And he goes, "Well, I need to raise money. I'm borrowing from Peter to pay Paul because of the float and this, that, and the other thing." And so I said, "Well, what if I helped you to raise the money?" And he goes, "Well, then you could help me." So we went down the path of starting to write a business plan and a pro forma and put everything together for him. Got to the closing table only to find out he'd had a bankruptcy in his past. And it was like, could have told me that before we started.
Yeah.
But we'd done all the work to figure it out. And literally the next day, Discount Power was born. We modified the plan to do it the way we would have done it, and went about it and raised the capital. And we saw what a lot of the other people were doing. We got to see the inner workings of that company. And because of that, we got to see what the right way to do it is and what the wrong way to do it is. And so we raised quite a bit of capital. I think at the time I raised like 5 million of equity and like 30 million of a receivables line to float the power. And hired software developers day one to start building out a system for us internally that would allow us to manage the volume that you experience in that space if you do it right. And literally the difference that we did, a lot of companies would do traditional marketing where they would go to market with, flyers in your mailbox or TV advertising or radio advertising or things like that. We focused on building a network of brokers, and having tiered commission structures, not MLM, but where, if you had a relationship with a large organization that could get a lot of customers, it would create a residual commission for them. And so we had to build a whole commission engine to track and pay all that every month. But it was a different way of doing it, and it went viral, and we signed a lot of customers. And one of the things that we also figured out very quickly was how to price commercial customers, not just to go after residential customers. And that obviously helped significantly grow the portfolio, because every commercial customer you bring on is equivalent to 5, 10, 15, 20 residential customers. So the portfolio grew fast. And everybody else was doing variable products at the time. We did fixed price products for the commercial customers, and that took on. So I was able to have a successful exit from that not long after we started it. And literally my phone started blowing up with everybody saying, "How did you do that?" And so that's where Esco Advisors was born, was just doing consulting. And what ended up happening was we noticed very quickly that we were getting asked the same question over and over and over again by different suppliers. And so we started building that same software team that was with me when I was at Discount Power. They weren't in-house, they were a consulting firm. So I had them start building a platform different than the way we did it when we were there. Built it as software as a service rather than a homegrown solution. And it went viral. I literally signed 40 different retail suppliers in like the first year. And we started off selling vaporware where I had a graphic artist like draw up what the screens would look like and sold it and used the cash flow from that to be able to fund the software development to build it. And it worked. And we ended up growing to be one of the largest energy trade risk management platforms for deregulated electric and gas suppliers, where we were doing load forecasting, and we got more accurate than just about anybody out there. So that when you aggregate a large number of customers, you could manage the volatility of the power and what it was going to do, so you could hedge and back to back your transactions. And so that grew very popular. The problem with the deregulated electric and gas market is that while it's an annuity-based business, at the same time, it's a very small incestuous business, and it gets consolidated quite often. So you'll build up a portfolio, and then that portfolio will disappear to one of the bigger guys who has more money, and then those guys will go start another one and do it again. And so when you're running a software company, having customers where you sign a customer and you get annuity-based revenue, and then all of a sudden the revenue disappears because the bigger guy who's not using your software just bought them, it created some very interesting cash flows. And so we built the business up. We got that business to, I don't know, I think we were doing like 8 to 10 million a year in recurring revenue. We were managing over 5 million meters of customers in the electric, and we built a solution also for gas to manage moving the gas molecule. We had a hedge fund come along and offer an exit, and I knew that the only way to scale that business to the next level, where I'd have another level of equity appreciation, was going to take more capital, and which meant dilution and a lot more work. So I took the exit, and some of the team kind of stayed on board and kept running it, but I took the opportunity to go and start something new.
Sure. So I'm just gonna pause you there, because I think it's already clear through the conversation that that title that you put on yourself as a serial entrepreneur is clearly true. But I just want to go back to the origination of that. Where do you think that mindset comes from? I know you were talking to me about your father and his business.
Tell me more about that. I would say I learned more from being in my father's shadows than I did in school. And he was the CEO of a public company for 25 years, a serial entrepreneur himself. And the company he founded, it invented active noise cancellation. So Bose headsets, for example, was in violation of his patent. They managed a portfolio of about 280 patents on a worldwide basis, and they had offices all over the world. So Japan, UK, Maryland, Connecticut, New York. So he was constantly traveling, but I got to hear him all the time. He taught me how to build models, taught me how to write a business plan. I didn't learn that in school. And it gave me the drive. He was always going workaholic. So it was just it was a completely different mindset than what you see a lot of these kids today. Being able to have a mentor like that could give me experiences that, I did summer internships in a lab, not, working at a grocery store as a cash register. So that gave me a lot of experience and exposure to technology and business and modeling and raising capital. And, when you're in a public company, you're constantly raising capital. So it was a lot of fun, being able to have that mentor. And my father and I talk every day. He's one of my best friends, and we have a great relationship. So it's a lot of fun.
For sure. And actually, it's interesting. Just on my drive in to work this morning, I was talking to my fiance about this about our two children, and we were having this conversation about schools and how they don't teach these basics that you really want them to for your children. And my eldest is very good at maths, and he's very into algebra, and we're trying to talk to him about savings and in compound interest and all these other areas that you'd think are actually so fundamental to good financial management, but schooling is still teaching him about in the UK and about the Tudors and these things that are like the Vikings that I'm very interesting, but is it going to set them up well for a business life beyond? So I suppose having that insight must have been useful, not only also to see the fruits of the labor, but also I suppose his view of risk and opportunity in creating something out of nothing.
The one thing that I learned very early on is if you're going to be an entrepreneur, you got to be a risk taker, and you got to be able to take calculated risk. So you have to be able to look at and this is where putting together a pro forma, putting together a plan, understanding financials, understanding cash flow really comes into play. So many people that start businesses that don't put a plan together and then execute on a plan is the reason that they fail, because they didn't understand the financial dynamics. They didn't understand how do you acquire customers, what's the cost of acquisition of a customer, the fundamental marketing 101. And so it where I've been very successful is I've always been a fairly big risk taker from a standpoint of, if you build it, they will come, a lot of scenarios. But it's also because I knew I had, look, one of the biggest successes I've learned in life is know what you know what you don't know, and find somebody who knows what you don't know, and 6 degrees of separation. Those are the 2 key fundamentals of business. If you can find people that know what you don't know to fill the void, and you understand how to use tools like LinkedIn or serial networking, and not being afraid to go up and start conversations. And you never know whose uncle is Bill Gates, right? Like, you never know. I've raised more capital that way. I'm probably over $500 million capital raised in my career. And a lot of it's just because I'm not afraid to ask, right? I'm not afraid to walk up to somebody and introduce myself. And every conversation is, what do you do for a living? And once I find out what they are, if they're anything of network or value that could help me, then I really dig in and start a conversation. If they're not, then I'll be nice and cordial, and depending on what the scenario is, either move on or keep going. But it's a mindset, the drive, and you've got to be driven. Being an entrepreneur is not a 9-to-5 job. It's first one in the office, last one to leave. And it's finding those quiet times when you can actually accomplish a lot more so than the chaos of the middle of the day when it's whack-a-mole and you're dealing with just putting out fires all day.
Sure. And looking back across your previous ventures prior to Teraflow, which we'll come on to, was there a particular failure or setback that you learned the most from, or that became a kind of lesson to you in how you would want to run businesses moving forward?
Oh, I've had plenty of failures. But the one lesson that I've learned very quickly in business is you have to be able to pivot, and you have to be able to, hire slow, fire fast. And so whether it's a failure of hiring an employee or it's a failure of a business model, I can give you a great example. Right after Hurricane Harvey hit, right after I moved to Houston from the Northeast, I started a business called JDM Renovations, which was getting me back into construction again. And my younger brother at the time lived in Connecticut, and I called him up and I said, dude, pack up your stuff and come down. There's more work down here than you can shake a stick. And he was a very skilled carpenter, finished trim carpenter. He was traveling the country building out retail storefronts. And I was like, dude, there's more business down here, because when you do the retail storefront thing, you travel for 2 weeks, work hard, and then you have 2 weeks off, and you blow all the money you just made. And so it was a lifestyle that was constantly, not building any value. So I started a construction company, said, look, I'll do the business end of it. I'm still doing consulting. I'm still out doing other things. I'll do the business end of it for you. You build the crew and go swing the hammer and get things done. And then we'll reinvest. And he did. And we absolutely killed it. And we started investing in CNC machines, building out like a man cave of toys. Well, that man cave then spun into a whole new business, because people would come in and be like, can you make this? And it was like, well, yeah, I got the machine right there. I can do that. And they'd be like, well, I need 100 of them. And it was mass production. And it got to the point very quickly where we were making more money with the machines in the back than we were with the guys out swinging a hammer, because the same guy could run 5 machines versus swinging one hammer. So that was a lot of fun. And it got to the point where we had to very quickly make a decision of, do we scale this business? Do we get bigger equipment? Because we were starting to pick up more and more business, and it was all word of mouth. We weren't doing any advertising or anything else. So my brother finds this one piece of machine. This is right during COVID, and it's the size of a school bus. It's not little. And it would not fit in the shop that we were in. And he's like, dude, this is the next level. This is where we need to go. And I looked at it and I'm like, okay, I'll figure out how to find it. So I went and called up a equipment leasing company and said, I want this piece of equipment. My business is booming. And we bought the piece of equipment. Then we looked at each other and went, oh crap. Now we got to find a bigger shop. So we went out and looked and found a property that was 32,000 square feet. At the time, we were in 4,500 square feet. And we had gotten an EIDL loan from the federal government. So we had like $300,000 cash in the bank to burn. And it was like, look, go big or go home. It's time to take the risk. So I found a buddy of mine that, is in commercial real estate, and he bought the building for us, and we moved the equipment, got it set up. And then we had to go find a lot more business because that building was significantly more expensive than the building we were in. And we knew that if we had the setup that we could do it. So what did we do? We threw a big party and invited a whole bunch of people to come check out the new shop that we had. And sure enough, that brought in quite a bit of business. But it was, that's the kind of thing where you've got to take risks. Now that business struggled for a while. And it was constantly pivoting from manufacturing for one client to another. But we've realized very quickly that if we could find the right clients that had repeat business and needed the same thing over and over and over again, we got very good at that and got our margins up, and they would come in every month. So I didn't have to sell as much every month. And that business grew, and we partnered with companies, launched new products, and built some crazy things. But we had to hire and fire clients because they weren't ordering enough, or they weren't, it was too complex of a product and they wanted too low of a price, or, it was something that they couldn't pay well. And so we had to find, more creditworthy clients and things like that. But now that business is 12 employees and pumping out millions of dollars a year in revenue. And we make some of the coolest things out of that shop that you've ever seen. But it took a few pivots and changing the business model to be able to get there. And so if you're stuck on one plan and you can't let go of that and recognize early on that that's not working, and be able to pivot to a different model, and change quickly and rip the Band-Aid off, you're just going to keep going and sink your life savings into it and fail, versus if you pivot, all of a sudden something works and clicks and off to the races you go. And that's literally what happened with us with Teraflow.
Sure.
It was a pivot.
Well, I think, great lesson there in, being nimble and fast to make decisions when you see the opportunity or the current business not working, as you say. So talking about that pivot then to Teraflow. So explain more about Teraflow, and I suppose the crux of the core problem that you believe the business solves.
Well, let me tell you how I got into Teraflow, and that'll help tell the story. So at the time that we were really at the height of Texas Fabrication Company, which is a DBA for JDM Renovations, we rebranded. At the time, I wasn't in energy at all. I had finished my last consulting job, and I was focused on really building up the metal fabrication. So we were mass production metal fabrication, making everything from aftermarket automotive parts to airboats to parts for data centers. And my mother-in-law, who's a commissioner for one of the large fire departments out here, came to me and handed me this one-page flyer and said, "What is this?" And I said, "I don't know. Let me look." And it was a company that had a new battery technology that was looking for a public-private partnership to be able to get a grant to put one of their batteries in to help them prove out the concept. Because whenever you have a new technology, you need early adopters that are willing to prove that it works. Because everybody that wants to buy them goes, "Well, how many of these do you have installed?" So very quickly, I called the guy up on the flyer and I said, "What is this?" And he goes, "It's a flow battery." And I said, "What the hell is a flow battery?" And he explained it to me, and they happened to be the chemical manufacturer for a revolutionary new chemical for flow batteries, which was called an organic, instead of using vanadium. And so he walked me through it. And he said, "We make the chemistry. We don't make the balance of plant. We're going to buy the balance of plant from overseas, from Europe, from another manufacturer where flow batteries are way more prevalent. It's a vanadium flow battery, but if you put our chemistry into it, it works." And I said, "Okay." I said, "Well, why aren't you making it yourself here in the United States? And who's writing the software to control it?" Because at the time I knew how ERCOT worked very well in Texas. So he said, "Well, we don't have the skill sets to make it here in the United States." Well, guess what? I owned a mass production metal fabrication company. So I could make just about anything. And we didn't just do metal fabrication. I mean, we built trailers and all kinds of stuff. So we were doing electrical and plumbing and everything else already. So I looked at him and I said, why don't you come to my shop? Because the guy was in Houston, and let's show you what we do. And maybe we'd be interested, because I had the background in energy software. I had the background in how all the regulatory worked, and I now had the background in manufacturing. I said, why don't we talk about maybe becoming your domestic-based manufacturer of these batteries? I didn't have to understand the science behind it or the PhD or any of that, because they already did that. All I had to do was build the rest of the operation unit to make it function as a battery here in the United States. And there was a lot of incentive to do that. Domestic-based manufacturing is a very hot topic right now. So we did that. And then one of my former investors that invested in my software company, ESCO Advisors, called me up, and he owns a very large retail supplier that I helped him start. And so we were friends, and he called me up, and he wanted me to come be the CEO of his energy company so he could go do something else. So he asked me, he goes, well, how would you maintain my portfolio and grow my portfolio? And I said, batteries. And he said, what do you mean? And I explained it to him, and he went, I'm not going to hire you as my CEO, but we're going to start that company, and here's $2 million to get it started. And I went, off to the races we go. And so that was the first $2 million. Within 60 days, we raised $5.5 million. So we raised some more from friends, family, and strategic partners. I begged some of my former coworkers at the last business I was at to come help me, because it's not something I could do on my own. So I got my CTO, who became a founder at the time. I got my development partner, who actually was my landlord for the building that we bought out in Belleville for Texas Fabrication Company, and a couple others. And I said, here's what I'm doing. We're going to use the shop that we built. We're going to make the parts, make the batteries, and we're going to make a lot of money. And I showed them the modeling and the planning that I had done, and they went, yep, we're in. To say it's the biggest thing I've ever been involved in is an understatement. Once we realized, and at the time we didn't realize really where the best use case for Teraflow was. We just wanted to make longer duration storage. And when you look at flow batteries in general, and you look at the fact that there's no thermal runaway, there's no degradation, they're the safest, cleanest battery in the market. And oh yeah, they happen to last 20 to 30 years. So when you actually look at the lifetime cost of operating one, it's cheaper than lithium ion. So it had a lot of really cool features and benefits to it. And long duration storage is where the market is going. But as soon as batteries started catching fire, you had a lot of NIMBYism with lithium ion and everything else. So it was like right place, right time. Then Trump won the election, and it was like domestic-based manufacturing is the end thing. So we were in critical infrastructure for energy, domestic-based manufacturing, like all the right places, which made it really easy to raise capital. Then we realized very quickly with a flow battery, you can actually charge and discharge them simultaneously. So when you start looking at the different ways you can use these, because they're engineered differently than a traditional battery, it's a liquid battery. So it's really great for large scale stationary batteries, not portable batteries like a cell phone or something else. The use case for grid support got really big, but then we realized this AI data center boom was going on. And the previous company we worked with did a lot with power optimization and controllable load resource for Bitcoin mining data centers. So we had a background in power optimization for data centers already with the crew that we'd built. And so we very quickly realized that if you use this battery for an AI data center and you use it as a replacement for the UPS, that all of a sudden it opened up a lot of benefits to the data center. And what do I mean by that? Well, when you look at a UPS, traditional UPS for a data center is about a 10-minute, maybe a 15-minute battery. And the UPS has to solve a lot of problems, which is dealing with AI data centers have extremely volatile power usage, especially when they're going through like learning or training mode. So you'll see a third to half of the data center power swings. So if you have a gigawatt data center, you're talking 300 to 500 megawatt swings 12, 14 times a minute. Well, the reality, and I'm talking up and down, the reality, it looks like a sawtooth. When you have that kind of volatile power, the generation assets out there, even the fastest natural gas generation assets, take 30 seconds to ramp up or ramp down. That's the fastest, right? You start talking combined cycle, it's 30 minutes. The grid has rules as to how fast you can ramp up or ramp down. So that volatility has to be, everybody's turning to storage to solve the problem, but they're either using lead acid, lithium ion, or nickel. Okay. Lead acid's big, heavy, and not very pretty. Lithium ion has thermal runaway characteristics, and nickel's very expensive. Well, it's roughly in the $1 million per megawatt range. Well, our battery's about $2.5 to $3 million per megawatt, but we qualify for IRA, which cuts it in half. So now you go from a 10-minute battery to a 10-hour battery. Okay. Well, when you have long duration like that, now all of a sudden you have flexibility. So you can take a data center that wants 5 nines of reliability, and you can actually disconnect it from the grid for 10 hours and run it off the battery and still have 5 nines of reliability. So that became very interesting. And then all of a sudden, talk about right place, right time, Texas launched what's called Senate Bill 6. Well, Senate Bill 6 requires any large load that's interconnecting to ERCOT to be a controllable load. And that puts you to the top of the bid stack as far as, interconnection approval. What that means is that the grid can tell you within, I think it's 30 minutes notice, I have to go back and look, that they need you to turn down. Well, when you have a data center that you want 5 nines of reliability, you don't want to turn off at all, ever. So they have to find ways to allow either backup generation or energy storage or something like that to allow them to do that. Well, our battery replaces the UPS. It absorbs all the volatility and deals with that. It eliminates harmonic distortion feedback to the grid. It eliminates the redundancy you need in backup generation. It opens up additional land spots where you can build these because you don't need as much utility reliability. So there's all kinds of really cool benefits you get out of it, and allows you to operate the way the grid of the generation asset wants to operate. Because if you did a large swing like that very quickly, you're going to trip breakers at either the generation or the substation and create catastrophic failure, which means it just dominoes, right? I don't know if you remember the Northeast blackout that occurred in the United States, but that was a domino effect, right? So the requirements for data centers are getting more and more stringent because they're building the way that it's going is mega campuses that are, now you're hearing 11 gigawatt campuses. That's a lot of power. And if you have that big of a swing on a campus that big, there's no power infrastructure that can support it other than a battery. So we found a more elegant solution to do power orchestration, power control, responsive load, controllable load using a battery. And it happens to be the safest, cleanest battery with no degradations in cycles. That you don't have a limitation on cycles. They last 20, 30 years. The reality is they'll last longer than that, but no one's ever had one longer than that. And we started with a proven technology. So we're started with vanadium. Our IP is more in the how do you do it? How do you run the battery in a UPS mode? And how do you do it using what they call large tank format? So it was really taking what used to be AAA model, which is lots of little ones, and putting them together to get a big one, to making one big one with large tanks. So that's really where we've grown Teraflow, and what we're doing is now standing up domestic based manufacturing, vertically integrating the construction of them, because our batteries are an entire building, not just Connex containers. Standing up software as a service to be able to operate, maintain, and monitor the batteries and dispatch technicians, and then operations and maintenance would be, dispatching the batteries into the grid or determining when to charge, discharge, and maintain them.
Sure. Lots to digest. And thank you for explaining it so articulately. A few things to follow up with then. So firstly, I suppose in that journey, when was the moment that you realized the scale of what you were onto here, and, that kind of moment that made you really recognize what this could be?
It happened really quick. I mean, we're growing at such a fast pace, it's scary. I mean, Teraflow is literally 12 months old right now. We started the company in June of 2024. We closed on our first capital October of 2024. So to give you an idea, we're coming up on 12 months from raising capital and a little more than 12 months from starting the company to begin with. What ended up happening was everybody we talked to was a positive meeting. I had no no's. We'd go into a meeting, we'd explain what we had. Before we even figured out the data center side of it, everybody was like, yep, energy storage, domestic manufacturing, checks all the boxes. And they were pulling their wallets out at the meetings, which was why we raised money so quickly. And that was at a lower valuation, obviously, when we first started. So we then like quadrupled our valuation and we were still able to raise money. We're like, holy cow, okay, this is really something big. And so the valuation was literally almost doubling monthly, to be, and not running into obstacles to raise money. So it got to a point where it was like, okay, here's the roadmap. And so we went and said, we've got to go, we've got a proven concept. We started bringing on some really, really big partners with multi-billion-dollar balance sheets that wanted to vertically integrate, that said, you're doing flow batteries the right way. We then found partners that were in the flow battery space, and really where we hit it and we realized, holy cow, now's the right time to commercialize flow batteries in the United States, was when we found companies that made all the parts that were the complex components of making these things that I didn't have to make or have the engineers to figure out how to make, right? So the way a flow battery works is basically large tanks, pumps, and what's called a stack, which is it's the reactor, if you will. It's where the electron exchange happens between the chemistries. And what was interesting was when we found companies that for 20 years had been making stacks, and they had like the Ferrari of stacks. They figured it out. They've refined it and gotten it to the point. And now they've got a multi-billion-dollar balance sheet where they said, well, if you order enough of these, I'll stand up a line dedicated to you. And I was like, I'm your Huckleberry. Let's go. So we very quickly got to the point where we realized that the supply chain was available now at a scale that would support the growth that we thought we were going to experience. And what happened is we went and presented to, once we figured out how the data center worked from a power perspective and how to implement the battery the right way, we went to a couple data center companies that were like some of the top 10 in the world. And we presented and they went, oh yeah, no, let's plan that into our next campus. And we went, oh crap. Because now I had to stand up a factory to meet that. And they're all like, yep, I need this in 36 months or less because there's a race. And I went, oh, so now I've got to go not only design a product, but I have to design a gigafactory to deal with. I mean, what we're getting right now for orders is gigawatt scale orders that are multi-billion-dollar orders. Dude, I'm 12 months old. I haven't even built a factory yet. So it's a very like, oh crap moment a few times over because it keeps getting bigger, and it's exciting. It's more money than I've ever raised before. So I'm having to bring on people that know what I don't know to help me, and not be too proud to say that I've never done that before. So I need to find an expert that knows how to do that. Then the key comes into how do you find the right people? So it's been a wild ride. We're having an absolute blast because everybody walks in and goes, holy cow, is just exciting. Right. And when people are like, well, I want in, and we have to turn people away that can't write a big enough check, but they want to write a check. Yeah. I'm on to something.
Yeah,
right?
For sure. I think, as you say, as an entrepreneur, you're always naturally you have a natural positive disposition to things because you get behind them and you want them to be successful. But when you're doing that and it really does have this opportunity, I suppose it's like a perfect match. So I know you mentioned you've trademarked the term long duration uninterruptible power supply, or LDUPS.
LDUPS, yeah.
LDUPS.
So we tried to come up with a product name that fit what we were doing, we've got some great patent attorneys. They've helped us a lot with protecting our IP and making sure that we're thinking about what we can present when and how, and what we keep as trade secret versus patent. And so it's been an interesting ride learning that side of it. The beauty is I got a lot of experience from a dad that had 180 patents worldwide. So I knew a lot about patents, and I already had a few patents in my name because he would kind of force me into that role to be like, okay, you came up with something, let's patent it, and taught me that. So we filed a bunch of patents, which in the flow battery space is not easy to do because vanadium flow batteries have been around for over 40 years. So there's a lot of patents out there that you have to navigate. But we found some patents and we figured out things that nobody else had done because we're outside the box thinkers. We're not PhDs. We looked at it from a different perspective, and we tried to design a battery that worked the way the regulatory market wanted it to work, not the way all the PhDs were building the batteries.
Sure. Yeah. I get that for sure.
So it definitely changed the perspective for us by being taught as a serial entrepreneur not to be stuck in a box.
Yeah, for sure.
And when you bring in people that don't have the PhD in the background, it definitely also helps to think outside the box because they don't even know what the box definition is.
Yeah, exactly. And I suppose to kind of link to that then, because you've obviously built and had these successful ventures before, but this, admittedly, as you said, is on a different scale to that. So how do you think about leadership, I suppose, differently now, one with the experience that you've had, but also given the scale of this to earlier on perhaps in your career?
Well, finding talent is not easy. Finding people that want to work as hard as you do as an entrepreneur you're never going to find them. I'm a big believer in alignment of interests. So not being greedy, not having to own 100%. I'd rather have a small piece of something absolutely massive than a big piece of something that's small. So we instantly created an employee stock option program to be able to compensate our employees with stock so that they're motivated. It creates a more sticky environment, good benefits, things like that. The funniest thing though is finding talent hasn't really been our issue yet, because when you have a really exciting story and like where I'm really good is being passionate and being the evangelist and telling the story and being excited all the time. That's a little bit ADHD and a little bit just, experience and doing this a few times. But having that excitement when you get in a room with an investor and you can talk the talk, you can walk the walk, you can prove things to them. You've got a plan and they see that. That's where it makes it a lot easier to raise capital and or to find really good talent that's willing to put skin in the game. So as a startup, your only capital that you've got is stock, right? When you're first starting something, but you also want to be very careful who you give it away to or how you give it away, because you don't want to give it away to somebody that then leaves you 6 months down the road and leaves you high and dry. So first recommendation I could have is make them vest. Don't give them just stock. That way they have to put skin in the game and stick around to help you. Cause I've had a partner in the past where we started a business and like literally 3 months after we started the business, he went and said, I need to go make money, and left us and still had the stock. Cause once you give it to him, you can't take it away. So vest your stock with employees through options and find an attorney that knows how to structure that properly. But when you align your interests with people, then they're all rowing in the same direction. And then you need to be able to make sure that you can divide and conquer, not micromanage. So it's how do you create the roles and responsibilities and figure out how to work with those people to be able to make it so that you can scale faster. What we've gotten very good at here with the team that I built is everybody's dividing and conquering and doing their own things that they need to do. We check in frequently and make sure, do you need my help? Do I need your help? Whatever, to be able to accomplish more. But I don't have the same person by my side at every single meeting. It's like, okay, you go do your stuff, I'll go do my stuff. And we've brought a lot of capital in, we've brought a lot of projects in, we've been able to accomplish a lot. So finding people that can be independent, that you can trust, is also extremely important. My right hand, and understanding finance is very important. So you can watch the numbers, understand what's going on, figure out what your runway is, and figure out how much time you have to raise more capital if you're in that kind of business. But attracting talent, when it comes to C-suite, most of what I went to was my Rolodex to find people that I'd worked with before that I knew were same mindset as me, same work ethic as me, and then just told them my story. And I, luckily everybody was like, yep, no, I'm in. This is going to be the next big thing. And what's interesting now I have people from competitors that are like coming in, telling me their whole life story and what's going on at my competitor, and the fact that they want to jump ship because I'm way more exciting than they are, because I'm growing faster than they are, or the way I'm doing it is the right way to do it. So that's always a good, attaboy or a validation, if you will, that we're on the right track.
Sure.
But
and when you look so obviously there's people within your network who perhaps you know of or are recommended to you, and there's an angle there. But then there are always individuals who are completely unknown. Maybe you don't have any mutual connections. What would be some of the specific traits that you look for on an organization on this journey that you would be sort of assessing through an interview process?
So especially if I'm looking for somebody more senior, you don't want to see a resume where they've jumped around a lot. They're a year, 2 years at a company and then they went to the next thing. Cause those people are constantly always chasing the money, or there's a problem where they don't fit in with a culture at a work environment. Two is that, when you get them on the phone, a lot of it's going to be personality trait. Are they going to fit with the culture that you're building at the organization you're building? Right? Do they have the same attitude? Are they too serious? Are they not serious enough? Those are always important things. And then a lot of it comes down to, before you go hire, having the right roles, responsibilities defined that are realistic, right? You see so many of these job postings where they're like, oh, you have to have 10 years of experience doing this. And I know from when I went to go apply for jobs, I learned really fast. I'm very technically savvy, all these other things. And before I started Teraflow, when I was trying to figure out what I was going to do next, and I'd go look at these job postings and be like, oh, that'd be a cool job. And I wanted to pivot from the deregulated side of it to the physical asset side of it, like renewables or batteries or generation assets or things like that. Everybody looked at it and said, well, you have no experience in this, so therefore you're not qualified. I don't look at it that way at all. And some of the best people I've hired have been pivots, right, where they've jumped industry. Really what I look at is what was the role that they were filling and what were they doing? And I mean, I'll give you an example. I'm recruiting for someone to go, like I do a lot of the speaking right now, but I don't have time to do it everywhere. And I've got to go build brand awareness, and I've got to go out and be at all these conferences. So I'm looking for someone right now where I need to make sure that they can command a room, that they can gain attention and everything else. And so, I meet with this one guy and he's shy and timid and he's got a phenomenal resume, which resumes are as good as the paper they're written on. But you look at it and go, man, if I put you up on a stage to present my stuff, I just don't see it. Then I interviewed this one woman and it was like, holy cow. And I was blown away. And you could tell instantly that she was the one, right? So it's interesting when you go through, like, a lot of it is don't interview one person, interview more so that you can see what the pool looks like. And then if it's a serious role, I have 5 people interview them, not just one. So I'll have my CTO, my COO, other people. And then that way they get to interact. There's different questions asked. And then we come together and we sit down and say, we're going to have to live with this person. It's an important role. Do you think that person has the qualifications? What did you see that I didn't see, and everything else, and collaborate? So it's a combination of depends on how important the role is. Depends on what you're trying to accomplish out of the role. Is this a role where you're trying to find somebody that knows what you don't know? So in those situations, I would go do research so that I could at least ask questions that would get them to talk about the parts that I don't know, to see if they know what I don't know.
Yeah, for sure. But that is a common trait or a challenge of an entrepreneur going into areas that they don't know when you're hiring for it. Actually, technically, I suppose you're not qualified to test that technical knowledge. So how do you come about that? Or do you actually move away from the technical side completely and just focus on the traits you're looking for and hope that that's right? Or, what do you do in different areas? So
there's one other important thing that I've been doing recently, which has been actually proving to work quite well. I call it try before you buy. And so in a lot of the roles where they might be like a C-suite, I might hire them as a consultant for a few months just to see if they're a fit or not, right? And so I'll say, look, I'll hire you part-time as a consultant because I want to see how hard they're going to work to earn the job. and not have to give them any stock as a consultant. And even though it costs me money to do that, and it may not work out, and I may waste a little bit of money doing that, it's a lot better wasting a couple months of consulting dollars than it is hiring the wrong person.
Of course, yeah. We did a lot of work and research into the study of the cost of a bad hire, and in particularly a startup scale up organization where one person in a in a 20-person business is 5% of your culture. It's such an important part. It's different when it's 1,000 people or 10,000 people. One person still has big ramifications, but in a smaller business, it's even more so. The cost of that, the training, the onboarding, the cultural engagement your team have, when you make that hire and it doesn't go to plan, actually, it's a far more costly than, as you say, 2 months consulting gig. So I see a lot of organizations do that sort of thing. One follow-up question to the point around the consensus that you have with your other stakeholders. What work do you do up front before the hire's made to ensure you're on the same page with what you're looking for? Or do you leave that to after the meetings have happened to then come back and debrief? How do you approach that?
No. So, I mean, it depends on the role. If it's someone that's going to work underneath someone else, obviously they have the bigger stake in it. And I'm just I'm the additional people that interview them before they get hired. I let the owner of the division make the decision ultimately. Cause you gotta instill value in your team and have the confidence that they can make intelligent decisions. So if my COO needs an ops person to help him, he's the one that has to write the job description and put together kind of the plan and the salary requirements and everything else. And most of them, we are using recruiters for some of the higher level positions. So in those situations, they'll go out and then they start getting a talent pool and they'll look at it and go, are these the resumes I was expecting based on the job description, or do I need to tweak something? And if they are the resumes you're expecting, then again, sifting through, coming up with your top 5 or so, and then bringing them in for interviews, and then weeding it down to 2 that you want to circulate with the group.
Sure. I see.
So it's a process, but, really the job description and the quality of the resumes that you get, when you get 10 of them, you get a better picture of the quality of the people versus just looking at one resume.
Yeah. The reason I ask is it's interesting how companies approach this, and actually how I and GS2, we approach this over time has evolved and changed. We actually now have a proprietary piece of software that allows us to benchmark and assess different stakeholders' view of the type of person that you're wanting in the post. So nothing technical, but purely around kind of cultural ad. We call it cultural ad rather than cultural fit. You're looking for, what do the different stakeholders look for? We can show it to our clients in a graphical summary, and then we can create an actual benchmark of that type of person that every external candidate goes through the same tool, and it uses AI to contrast and compare the profile of the candidate versus your profile. And it flags areas that we then need to dig into in more detail to really understand, is that behavioral characteristic.
It's a powerful tool these days, man. It's pretty wild what you can do with it.
Yeah,
so.
That's really useful. And then the second one actually that may be useful in the situation where you need more of a sort of sales type person or a kind of outgoing individual, or you're looking for a particular style, is we use a video shortlisting tool. So rather than just relying on the 2-dimensional resume, which, as you say, particularly with AI now, can be, people can put the job descriptions in, then they can use AI and they can create the best looking resume in the world. But actually, when you then interview them and they're a completely different person within 2 minutes, they're not going to be right. We use video shortlisting. So candidates have to answer a couple of questions that get presented to you alongside their resume. So not only do you get to see this resume, but you actually get to hear and see from them before you even meet them. And that's been a big game changer for our clients. It's reduced the time.
We do a lot too with LinkedIn. I mean, I'm the power of LinkedIn and like first degree, second degree, third degree connections. If we're looking at a candidate, we first look to see, is there any connections that we've got? Then we'll call those people and say, before I interview this person, is there anything I need to know? Is this person worth a crap, or are they garbage?
Yeah. Sure.
And that also helps as well.
Yeah. So I suppose looking forward then, 12, there's lots happening, it sounds like, on a daily basis, but if you're looking out sort of maybe 12, 18 months, what does the future look like for Teraflow Energy, in terms of, the factory, hiring, the actual delivery to clients? What's on the roadmap?
We have 2 commitments now for gigawatt data centers. So we have a lot of field to hay. We have in the works 3 factories right now. One is our prototype factory, which is about 100,000 square feet to make a small quantity of them and learn. And then we have 2 gigafactories, one in Houston, one down in the Port of Victoria that we're building, that are in planning phase right now. One of them is about 1.5 million square feet. The other one's about 3 million square feet. So, a very large scale, very quickly, spread out. And as we sell more data centers, we'll have to build more factories because we want to build hyper local to the data center to minimize transportation costs. So those are going to take 18 months to build. I mean, basically with the commitments we've got right now, we've got about a 36-month window. So we've got to, and the gigawatt commitments are not all at once. It's phased, over a period of years. So it's get the factories up and running. Some of the positions we're hiring now for factory of the future, automation, things like that, and get things really cranking. So it's onboarding. I mean, we anticipate probably 2,000-3,000 employees between these 2 factories. So it's a lot of onboarding, a lot of recruiting, a lot of, now some of that's assembly, some of that's industrial engineering, some of that's, other forms of engineering, software development, and then, energy operations and, running a knock and dispatching and settling the batteries that we manage, or batteries as a service as we get into that in the future. So, for us right now, it's we have a lot of brick walls to run through, but I've got a great team doing it. We've got a bunch of hires to make in the future, but I've been trying to bring on kind of the executive team that will then build out those teams so that I don't have to do every one of them. And it's gonna grow a mind of its own and naturally grow, and, produce quality product and really just scale the business until somebody big enough comes and writes a big enough check that says, we want to buy this.
For sure. And what's your, how do you see Teraflow Energy playing, I suppose, in the larger grid scale storage and battery industry in the whole of the US, and also, I suppose, maybe even globally?
Well, I mean, when you build gigawatt scale data centers that can be flexible loads, those are assets to the grid, not liabilities to the grid. That changes the game of the grid. Because what everybody doesn't realize is, yes, the grid infrastructure needs to be upgraded for peak power, but there's plenty of off-peak power available so that if you can shift the peak, you can fit a lot more on the grid. And that's really what these longer duration batteries give you, is you can take these large loads completely out of the picture during the day, and run them all more at night. And that opens up a lot of capacity. So, that's what we're trying to do. And unfortunately I've got other meetings starting to pile up. So, sure. I'm going to have to hop here soon, but,
yeah. I get that. I really appreciate your time. My last question then, I suppose coming back to the essence of the podcast, Better Than We Found It, it's about, ensuring, I suppose, that when you step back from your working career or whenever that does come, what you hope your legacy to be. And it feels like Teraflow Energy is a kind of legacy and career defining opportunity for you. What would you hope that would look like in summary?
I'm a big believer of leaving this planet better than I entered it. So a lot of what we're trying to do is create cleaner, safer technology, enabling, cleaner power. And so what's interesting is that the batteries we've got that we're building right now, the factories that we're building, are actually the largest flow batteries in the world, which makes us technically the largest flow battery company in the world, which is a daunting statement in and of itself. So being able to say that I pioneered that is obviously a huge legacy thing, that I pioneered flow batteries here in the United States and helped make the US the leader instead of China. That's a big legacy thing for me. But my dad always instilled into me giving back and helping people. And I'm actually a reserve deputy for the Harris County Sheriff's Office because I like helping and giving back. And I'm involved in numerous philanthropic programs or ventures, and so a lot of it is being able to give back and really try to help as many people as possible. So everything from putting better power infrastructure in place to support the grid to building safer batteries, creating a lot of jobs, and having the ability to say, I did that. I built the largest one or the first one in the United States. And somebody may come along like an Elon Musk and build it bigger, better than I did, but I did it first. So
for sure. Yeah, absolutely. And the plans sound so exciting. And I've no doubt with your passion and resilience from your career that you're going to make it a success. So we really appreciate you taking the time today, Jon. If people are listening who want to hear more about the business, or interested in getting involved in some capacity, or want to collaborate in some way, what's the best way for them to reach out or to engage with you?
The website, we actually just released our new website yesterday. So teraflowenergy.com is there's a contact us form, and that goes to a number of people in the organization. And we've got job postings up there and things like that. So we are recruiting, we are growing. And most of, find me on LinkedIn. I'm very active there as well. So, Josh, I appreciate the time, had a lot of fun on this, and by all means, it's been, interesting and fun and different. So
yeah. Thank you.
I haven't done a lot of podcasts yet because we've been so busy getting this started. So
Sure.
you're one of the first to get my time before I get too busy to leave and do them.
Great. Well, I'm glad I did that. So look, thank you so much for your time. We'll have to check in again
you.
at some point to see how it's going. But thanks for stopping by, and good luck with everything.
Thank you, sir. Appreciate it.
I hope you found Jon's story to be a powerful lesson in modern leadership, particularly in a sector as demanding and in the spotlight as renewable energy. I think it's one thing as an entrepreneur to have a vision for your company like Teraflow, but it's another thing entirely to focus on taking it from an idea into execution at the speed and scale that they have. And I think the thing that really stands out to me in the conversation with Jon isn't just about the technology, but it's about his focus on talent, knowing the traits to look for, and being confident and assured enough to know where you don't know and finding somebody to do it. That for me is really one of the ultimate tests of leadership, and how when you focus on an industry like this, you really can leave it better than you found it. So thank you so much for listening to Better Than We Found It. I'll leave all of the links in the show notes. And is this or another conversation sparks an idea and interest in GS2 or in Teraflow, then please feel free to reach out, share it with a colleague, a friend, or someone you think needs to hear it, as it's the best way to support the show. So until then, take care, and I look forward to seeing you again soon. Thank you for listening to Better Than We Found It. These conversations are a powerful reminder that while emerging technology is crucial, having leaders with the conviction and resilience to see it through is the only way we will deliver what is required. This podcast is powered by GS2, where our mission is to build the leadership teams that are shaping the future. I'm your host, Josh Huggins, and the conversation doesn't need to end here. Please connect with me on LinkedIn to continue the discussion. And if you enjoyed this episode, please subscribe to the show so you never miss what's next. And until next time, let's all work to leave our world a little better